Hello there. Looks like the speaker and I were accidentally sitting on a different meeting. My apologies for that. Hello, everybody. Speaker will
Hey,
be
Daniel.
joining in just one moment. Apparently, he and I were sitting on a different Zoom meeting, wondering where everybody was. Was that Anita that I heard say hello? Hello, Anita. Hello, Glenn.
Hello, Daniel.
How many do we have registered over on the Intel side?
You'd think by now I'd actually be smart enough to have this answer ready by the time I sign in, and I end up running from a meeting
First
right
question
into
I
here.
ask, right? Now that I can't access the meetup.intel.com.
141.
Okay,
Wow.
great.
That's beautiful.
We shall wait a few more minutes then and let people join. In the meantime, I want to thank Glenn so very much for jumping in and being the host yesterday. Last week, I was traveling back from a property that we have in Nebraska and was not able to join. And I heard that Joe Burko was a great speaker, so I'm going to go back and listen to it. Glenn actually told me I should go back and watch it. So good to hear that it was good.
Did a very good job.
Okay.
The other thing about Joe is he was very good. Like, he sent out the QR code to sign up on his network, and then he followed up to see if we wanted to have a meeting with him. And he was very quick to set up a meeting and have a follow-up meeting. So I thought that was pretty impressive.
Okay.
I had an opposite experience, Anita. So I set up a follow-up. Got all the automated messages and everything. Set up a meeting, and he canceled on me right before the meeting and said, "Sorry, I got something come up." So we rescheduled, and he didn't show again.
Happens to everybody, I guess.
Happens to everybody. Yep.
Yikes.
All right. Hey, just to start this meeting out, Dan is here right now. Let's tell him where we are and where we're located. So if you could put in the chat, oh, I see Dan just put his LinkedIn in and his connection. You better show up, Dan.
I'm here. We made it a few times.
All right. Hey, could you guys put in the chat where you're located? And put how long you've been coming to the Alternative Investing Club. I'd love to know that.
We got it to Austin. I love it. Whoa, a whole bunch of Austin. This is great.
Yeah, Dan's out of Austin.
Look 'em, baby.
You got a favorite coffee spot to meet investors? I have one in Portland.
Well,
I'm not saying you have to.
Mosworth is great. Houndstooth, I feel, has the best bean here in town. And then where I share at our co-working space, we do Barrett's coffee every day. So supporting a local home.
That's nice. Shout out to Santa Clara, Portland, Oregon, of course. Arizona, New Mexico. Hey, welcome, Joel. San Jose, Phoenix. Hello, Folsom, California. Folsom used to be our #1 location that people came from. I think it's now LA. Riverside, or at least that's the #1 place that we get people opening the meeting announcements. All right, just to give a couple of announcements. Who was that?
From LA?
Yeah, I was kind of surprised about that.
Everyone's VPN or something?
Yeah, maybe it is, because I didn't get the impression we had very many people from LA on this call. But it's the #1 place that I get opens for the meeting, the email newsletter. All right, so just a few announcements. Next week we are going to be joined by DLP Capital, and then we're going to take a 2-week break to celebrate the holidays and the beginning of the new year. And after that, our next meeting, I believe, is on the 5th, January 5th. So we'll be taking 2 weeks off. We always take Thanksgiving, the day after Thanksgiving off, and then 2 in December. And that's our rhythm. Every other Friday, we're right here. All right. Anybody else have any opens before we get started? All right, then I'd like to Dan. I'm going to have you pronounce your name again. I'm sorry.
Gruene, and if you want to call me Dan K, that's what my wife is still learning how to spell it, so we're good.
Well, Dan is here. He's an active real estate investor, advisor, and a partner. He is actively involved in raising millions of dollars through multiple different channels. And he specializes in niche segments such as self-storage. He also has a deep background in taxes. Dan holds his degrees from the Wharton School of University of Pennsylvania and the Thunderbird School of Global Management. And he was a native of Scranton, Pennsylvania, and now lives in Austin. Welcome to the group here, Dan.
Awesome, Daniel. Absolute pleasure to be here, folks. And I'm also a licensed rep with BV Securities up in Dallas, Texas. So there is my disclaimer du jour. And as you can see, I'm here in Austin. And if for those of you that have really, really good eyes, there's about 10,000 little Texases on me here. So a good gift. They're also in Austin burnt orange color. Holidays are coming. So I saw some of our friends here in Austin. So if you need to buy a gift, yeah, Brooke, we got a T-bird here. I love it. That would be fantastic. So I know you have some friends, always happy to keep it interactive. If anybody wants to comment but otherwise, Daniel, I'd love to just go right ahead if we could.
Absolutely. Go ahead and share your screen. And if anybody has any questions, go ahead and put them in the chat. I will judiciously interrupt our speaker as we go along. And unless, Dan, you want me to hold all the questions till the end, we can do that too.
No, this would be fine. So
okay, well, I'll jump in when there's an appropriate question.
Great stuff. All right, folks. Well, hey, happy Friday. Great to be here with y'all today. I know a lot of you have been traveling. I just got back from a wonderful family office events in Florida, and Texas, I still feel is hot, a great opportunity. And likewise, love your state. We spent a great summer vacation in Oregon and hope to return once again in July and August. So at the very least, let's get to know each other. My information is in the chat. And for those of you that are joining in, I'll pop it in at the end. So I'm more than welcome and do hope that we can begin a relationship here. So with that disclosure, once again, I am licensed under BV Securities out of Dallas. Here we are. I always think it's good to know who you're spending time with and wanted to show I had the benefit, like many of you on the call. I've been a passive investor for over a decade. My light bulb moment was learning that you can use your retirement dollars, your self-directed, your solo 401k to invest passively. This led me through a prop tech company in self-storage of all things. Guiding a colleague to raise a few million, which led to an exit to one of the REITs, and being on the founding team at Rocket Dollars. So some of you I probably have met before at the lights of Bigger Pockets, Best Ever Conference. And the net effect here, I had the great privilege to speak to over 500 sponsors, the likes of DLP and others that are joining your community. Invest with maybe a dozen or so, and then really see who I wanted to align myself, kind of as we all transition in one way or another as we hit COVID. So with that, when we talk or reference BV, Bridgeview, or you hear that through the grapevine, to the market, it's a Texas CRE shop. I like to think of it as a really solid, best of breed, vertically integrated company with our primary focus is Texas. I know that's the point of our call today, but you will hear that a lot. And I know this will differ from a lot of other sponsors that tend to focus, say, on Class B multifamily or strictly self-storage value add. With one or two very unique exceptions, our commonality is going to be in Texas. So, once again, without going into too much detail, there is a construction arm. We do have an in-house broker dealer for folks familiar with the 1031 world or looking to sell a commercial property. When you do have a broker dealer, you can offer the Delaware Statutory Trust, one of the DSTs that are out there, which is a pretty fun option. So always happy to share education there. At the moment, we're probably just crossing 800 accredited investors, families, good relationships in the RIA community. Some of us here know each other from the left field investor community. So this is, I'd say, kind of my personal natural spot. A natural spot for a lot of folks that have come through here, a fair number of engineers, tech professionals, doctors, et cetera, across the country. And we've had a pretty decent run so far. You'll see a mix here of multifamily, industrial, and this we recently exited on the 10th project here. So, boom. Final point here is not to go deep into our portfolio, but once again, valuing your time, a very big commonality till the final line, of course. When I joke we did the reverse commute to California, you're going to see a lot of Texas. Our guys as BV and entity, we were formed in 2011. Many folks, senior partners, VPs on down, have been in the real estate space or in their role or a tangential role, some since the 90s or 2000s, where our head and heart is a bit more on the development side, although we did take advantage of, I'll say, the value add craze in recent time here. But big point once again here is, once again, Texas. For those that know Texas, you see the major cities, but also some other cities such as in Arlington that you may not have been as familiar with, where we frankly see a whole lot of the growth coming in these days. And then final point, just for fun for our Californians on the call, this is a neuro hospital in Sacramento that we feel is going to be a great property potentially in the future in the DST space. It's a AAA rated tenant. All right, so just stepping it back a little bit more from Texas, just in the macro standpoint here, I'd expect many of you guys on the call to feel this, but I think the proof point is especially when you think of what are the pension plans for our teachers, our firefighters, what are they doing, how are they allocated? My father was a high school teacher and principal. My mom was a social worker. Have many folks in my family, particularly the older generations, that receive a pension or this was part of their livelihood. I think it's a pretty good telling point collectively that, alts, which include real estate, have gone from pretty close to zero, with some plans, as much as a quarter or a third these days. Same deal here when we look at different, I'll call it periods of volatility over time. Although this is the publicly traded market, you can see that the second line, the blue line on the REIT side, doesn't really dip down. Gold has taken a hit. Commodities, especially as we see here in Texas, could be pretty volatile. But generally speaking, REITs hold slow and steady and a bit more than inflation, a bit more than the market. From a risk return standpoint, once again, real estate tends to touch right around that 10% level with volatility in that 6 to 8 range. So once again, I also like the tangent, how we can actually see it, feel it, touch it, drive by it. It is a real asset here, particularly in the passive investing side. You get to know your sponsors, which I think is a really great thing versus the public market. I grew up trading on a trading floor for Merrill Lynch, and to be honest with you, it wasn't as I'd say personal as it is in the real estate side here. And once again, this is a little bit dated now at this point, but once again, from a stock market volatility, I share also, and a lot of us, imagine a fair number of mid-career folks here, midlife folks in that sandwich generation, may have our parents coming to us for advice to say, hey, what do I do, particularly if I'm looking for maybe something that pays distributions or that I can feel pretty comfortable with the notional. And I love this chart to the far left here. And I always like to give an example of a preferred dividend stock. It can have a high percentage, but if the stock dips, that's really going to hurt. Whereas in real estate, generally speaking, as a passive investor, your 100,000 that goes in, that tends to be the notional over time. So obviously there is risk everywhere here, but for me, this is just a nice telling point. And then, of course, we go into some of the other asset classes that we personally have been around in, myself in self-storage, industrial, and I think now more the development where folks have to live, particularly with incoming population, is pretty important that I'll touch on a bit here today. And from the macro here, kind of a final chart or so, just to look at once again publicly traded stocks, but versus the S&P. Let's go back from 2000. It's when I graduated. Keep the math very simple here. Is that over time, and this comes from Marcus and Millichap right here. The stocks that are tied to CRE, commercial real estate, tend to have a pretty good delta, and also from of course a little bit of not even a bump down, but kind of back in 08 or so. Pretty flat line, which seems pretty nice here. So with that, just Dan, I want to take a quick pause here. I know we had a few more folks join. Just see if any questions have come through the chat or any questions offline at this point.
We don't have any questions at this point. I know you mentioned the Left Field Investors Conference, and that's where I met you. And so that happened actually in Columbus, and it was good to meet you there.
Yeah, absolutely. And what I've noticed too, there's a lot of great, whether folks on the call, you are a novice looking to get in this space, or maybe you are representing a small family office. There's great national organizations like a Left Field Investors. There's other more regional here, depending on what part of the country you're either for an accredited investor, or so maybe you are the equivalent of a smaller family office. It's been very pleasing to see that across the country, there's more and more of these groups. And depending on, once again, kind of what you represent, what your goals are, it's pretty good to tap into. And Daniel, I think this is a great one here. As I said, as a former GE, General Electric, this would have been mind blowing and amazing for me. Working at a Fortune 100 company, to have this sort of connection affinity group would have been absolutely amazing. So, thank you to you and everybody else here.
Okay. Yeah, there are no questions yet.
All right. So Texas. All right. Everything's bigger in Texas. With one little caveat, which I'll make you wait on a little bit here. But for me and some of the folks, in Austin here, this may seem second nature. For other folks, though, this is a very, very unique story. Once again, I grew up in Scranton, PA. Was in the Northeast for a fair portion of my early life, and then had the great benefit for my fellow T-Birds on the call to split time between Phoenix, Mexico. I went to Guadalajara, came back with a bottle of tequila and a wife. Nothing to do with real estate, but was told I'm not the first or the last there. And also a little stint in California. It was on my bucket list too, back in the mid 2000s, and thereafter have been very fortunate to see around the country. And I think the story here, it's very unique, what we have here in Texas. And then at the same time, I also feel it could replicate, one may argue, what California experienced in the 60s and the 70s and the 80s. And as I said, I think a hypothesis and the data that we've seen, there's a few reasons that puts it all together as we go through here. So, first and foremost is jobs. Where there's jobs, people are going to move to. And, this is what we see time and time again across the state, that this is a really good one. And I think this also ties in, of course, with corporate relocations. I know, of course, here in town, the past CEO of CrowdStreet moved to Austin. Some of the team and execs from CrowdStreet also moved here in recent years. That's just a micro example. I'll say vis-a-vis some of the much larger companies. I'm sure everybody heard of Tesla here, but Tesla is just one of the many. And depending what sector you're in, there's probably other hot companies, I'd say top 10 list companies that have moved here. So we particularly, and I'll say the secondary, or to an extent the tertiary cities. So I mentioned, of course, the original triangle, a little quiz out there. It was Dallas, Houston, and San Antonio. Austin, frankly, wasn't even considered a big city, now one of the big four. And then the next subset of cities, such as an Arlington, a Corpus Christi, even down by the valley, to think about here. And then I feel there's also another range of tertiary cities, such as a Taylor, Texas, maybe that, in case you're local, you may not have heard of. I reference some of these because this is a great place for folks to relocate their headquarters. There is land, there's great local incentives, as you'll either kind of see directly here or maybe imply. Texas is an extremely friendly business state, and it's been the driver here. So, from many accounts, how you look at it, it's a growing population. And this is across many of the age ranges here. I was driving by one of the secondary cities, and I felt like I was in a little Truman Show bubble for 55 and older communities. Here in Austin, for those that maybe came to one of the soccer matches at Austin FC, in that area, it's a higher end area called the Domain. At least one, if not two, close to where I live in the Grove area. There is, once again, not just one, but two of the 55 and older communities with significant income that, once again, their stage of life to spend for themselves or their grandkids is going, in addition to folks that are both mid-career and early career, which I think bodes all well for the multifamily side. GDP growth, there's a lot of stuff. We'll take a look at the ports and otherwise here. But once again, when you're in a business-friendly state that has the ability to make stuff, it's pretty helpful. And just our strategic location, of course, here along the Gulf and then coming through Mexico, that's not going anywhere. So kind of flipping the script there, exporter, LNG, oil, other things, particularly now in the where your area of expertise is kind of on the chip side. Texas is taking advantage here. And then, most of all, the piggy bank that we see here, something that I am very used to after being here for a dozen years now, is no state income tax. To the tune where even if folks are coming for a few years, this is a great state. Much as I love coming to Oregon to spend vacation, and it just keeps the math simple. We have a 7-year-old, so to kind of teach him, you don't have to include tax when you say how much are you going to tip on an ice cream cone or a dinner. Kind of the same here in Texas. As we do get to our state income tax, there's just none, and it's something you really get used to. One, just for something as I'd say niche as a Roth conversion, or otherwise, once again, Texas being a very employer friendly state, it's a great state to have your own LLC S corp, or very small business, or to be a solopreneur, and all of those in one aspect under tend to flow through. So the no income taxes, I think, is huge. And once again, growing up, albeit on the Pennsylvania side of the tri-state area, my friends from New Jersey, not sure if there's any on the call today, but it's a very welcome, surprise that, how few taxes, albeit I would caveat residential taxes, I feel the state does make up there. So, it's not a utopia, but overall, it's a pretty nice situation. And here, this is our poster. This comes from the governor's office here. I'll take a little pause once again for folks that, maybe you read, you have a natural interest here. You see about right in the middle here on the vet side, the chemical engineering. It's a pretty animal friendly state, I feel, and some of the apartment complexes are picking that up, whether it's dog parks or otherwise here. There's a natural level of bilingualism here with Spanish and English, which is great. And I can read off the rest, but it's as you can imagine, there is some natural benefits, such as the amount of rail, just from being a physically large state. But then at the same time, as we'll talk on a little bit, once we move towards real estate, one may argue there's not that much land, which is a really, it's a really nice thing if you are kind of the owner or potentially an investor here in real estate.
Hey, Dan, we had a couple of people comment, especially when you mentioned income taxes. They wanted to know, what are the property taxes like?
Yeah, not fun. So, I mean, and it's going to vary a little bit here, but back of the napkin, you're probably, say, on $1 million house, about 25,000 a year. For my friends from Austin, correct me if I'm wrong or chime in if you live in one of the burbs, but there is a significant and personal politics and such aside, there is I think it's called kind of a Robin Hood law, where the larger cities tend to fund the smaller city school district. And just with the tremendous growth in a city, a tech city like in Austin, I just find it unique that Austin, which tends to be a little more liberal leaning, tends to fund a lot more of the very heavy conservative rural areas school districts. But that's not going anywhere. That's not going to change. Yeah, it is a significant. My point here, it is a significant expense, especially say if you're retired and you want to maybe stay in your neighborhood and you are on a set income.
Is it common for investors to contest the stated amount of taxes that the assessor will put on a property? Is that common in commercial and residential potentially, or comment a little bit about the culture of tax contestation?
Yeah, I mean, Texas, as you can imagine, and once again, it's a very, I'd say, business friendly, entrepreneur friendly sort of state. Government stay out of my hair, particularly when it comes to my money. I think there's a lot of that. I won't argue the social end on this call here, but yeah, ultimately, as I said, some folks, especially when it seems like a runaway train or an upward hockey stick, there has been a lot of And there is a formal process, basically, and there's different. I can only speak a little bit to Austin, but once you're over age 65 or a certain percent, I think it's 8 or 10% a year that can go up. That's it. I've seen some things comical on the commercial side, where, and this could be from the city of Houston or Harris County all the way down, looking to charge to the tune of a 40 or 50% increase. So this is where I think it really helps having a sponsor that has been literally boots on the ground local, probably has been through a few cycles before. I know from our experience, some of those we on the BV Bridgeview side have been able to ultimately, bring back down to single digits when it was comical. So once again, just putting on my LP hat, this is just a caution. Has it been somebody that knows the state, knows the locality, frankly, has been around a few cycles to know kind of how to manage these discussions in the certain calendar is, just a final side note. I mean, our state senate's in session only 5 months every 2 years, and then if you take that down to different municipalities, there's other little niceties, let's call it, that can significantly impact tax. So once again, it's I think there is some benefit to basically keeping it local.
Okay. I had some other investor friends comment to me that it's just part of their standard business plan that whenever they receive their property tax increase for the year, and I don't know if this is common or if it was just them, but pretty much they said, hey, whenever we receive it, we immediately contest it. And there's a little dance that goes back and forth. And usually we'll get it reduced by some amount. And that's just kind of how the business operates there. And I know in other states and other counties, of course, when the tax increase comes down, it's set in stone. But there seems to be, at least I know some people that think there's a culture of back and forth negotiation each year on property taxes.
Yeah,
Is that common, or is it just these people?
No, I think it is pretty common here. As I said, folks are gonna. I think there is a respect that some tax, is being paid, or folks are abiding by the law. But there is a certain feeling, especially once again, if it is just kind of a very deep influx, if it is a demographic sort of shift in your neighborhood too, I think there's going to give you more urgency to contest for sure.
Okay, interesting. Ashish is asking, how are climate disasters increasing insurance premiums and affecting CRE in Texas?
Yeah, I mean, listen, it's something I would, first start off. I can argue the same for, Louisiana Bayou and such. It's a gritty, unique, and beautiful individual that lives along the water. And, frankly, the headlines are going to hit when there's a major storm, and the Weather Channel and other media outlets are going to pop it up every year. Knock on wood, and I get it. Globally, things are changing, but I think to the extent where it would be an annual event, something catastrophic, we haven't seen that in recent years, and once again, hope that we don't see that. Like anything, I think it just comes into your underwriting. I think it's just certain areas that you won't touch. I said I just got back from Miami at a family office show. Many folks will not touch certain parts of the west coast of Florida or for certain properties, and that ranges to your point with the larger disasters, or I might have a plot of land with 10 large turtles. To the best of my knowledge, we don't have huge turtles in Texas, but so it varies, but it's something, yeah, once again, I think it goes back to, do you have a sponsor that has underwritten deals over cycles and over the years in the same geography that can opine on that?
All right. No other questions right now.
All right. So, I said it kind of comes back to jobs here, and I didn't look at Oregon, but it was easy to see California, kind of to the right side here on 50. Yeah, it's a good job market. Once again, it's a very, very business friendly state. Even in Austin here, for those that have been here, I half joke. One of our favorite gentlemen, who actually, when Austin, I would say, was legitimately weird, ran for mayor and almost got 10% of the vote in 2000. Our favorite homeless person, Leslie, who passed about a decade ago. But referencing him, I can say, you can wear a thong, a cowboy hat, both, nothing, at least in Austin, maybe not the rest of the state. But, once again, jobs are going to really talk, and putting the business climate first. I think it's kind of ingrained, whether you're, a newer Texan or longtime Texan, that this really, drives the machine, and frankly gets a pretty comfortable sort of life down here. So that's the with this, having a rainy day fund in the background, once again, the social stuff aside, it makes it for a pretty comfortable life and gives you the opportunity to choose, where you want to live and have a lot of resources kind of within your, bubble. We're tribal creatures at the end of the day here. So there is that nice about Texas here. And some of it will attach more towards, as I said, some of these tailor and tertiary markets where there's going to be a large corporate going up. But as I said, you get to choose. You can be very rural, you can be in downtown Austin, you can be otherwise. There's a pretty big benefit here. And just to reference some of the companies here, I'm local to Austin, of course, but San Antonio USA has a tremendous presence, kind of from San Antonio going down to Mexico. There's, whether it's Fort Hood, different military bases coming here. We can probably have a similar, map here with train tracks that I would think be very interesting. One thing about Dallas, Fort Worth, I think for folks that haven't been boots on the ground there, the Dallas MSA has done a great job of going out and up, out and up. What do I mean by that? Whereas Austin, for example, or I would argue to a point, take Portland, you really have to go downtown or maybe to one little area in the suburbs to get business done for certain activities. The greater Dallas area has done a great job to have their enough of a central business district, enough of a high-end shopping area, enough of good schools, kind of every, call it 15 or 20 minutes, which tends to be, a new city or a different part of a big city. Final point, didn't show it on the graph, but this is 2 years ago on a hot Friday afternoon, instead of coming down I-35, which takes you from Dallas or Fort Worth to Austin, I did the loop kind of going west. So a very comfortable 4-hour loop. And the first hour out of Fort Worth, every 10 or 15 minutes, it seems like another city was growing with multifamily. So once again, for the culture of folks here, that's a very comfortable thing. It could also be attached, once again, to one of these larger, companies building their headquarters there. This is your guys' world here on the chip side and on the tech side, but there's a lot here. And as I referenced, I think the proximity to some of the military here in Austin, at least, so there's a lot of the, call it very loosely military tech, some of the groups that tie with here with Capital Factory, and then, some of the larger factories and such across the state. Yeah, and then, just to look at the headquarters, a bit more from California, but you are seeing a fair amount move also. Some of the financial hubs, I know Goldman is going to have a huge office in Dallas. There's a lot that is coming here. So I expect these headlines to continue over time. This is a fun one. I didn't want to blow up with too many slides, but there's also a great one, not just with population, but from an airplane perspective. I know Kansas City tends to be dead center of the country, but even going up to Washington or up to Portland, it's still a reasonable 4 hours or so. As I said, from Miami yesterday, I was able to have a full day, even some post-lunch coffees, and then land in Austin to meet my mom and son. My mom flying in from Pennsylvania and otherwise for a 6:30 p.m. dinner. That's pretty solid. I've also, really made good use of my days going to California. So, from a business perspective, also, it's not the cross-country trip or otherwise, outside of once in a century, maybe a little more. We're not going to see snow impact that much, maybe a week or two in February in the DFW area, but otherwise, I think that resonates also. For the ability to kind of go back home, or if you have 2 offices or 2 locations, this is still I'll call a reasonable-ish, sort of commute here. And another reason why it's desirable for folks that might want to try Texas for a little bit, which once again takes us all back to real estate, right? Folks are going to want to rent if they're not really sure for the first year or two, and assuming you're coming from means, you're going to want to, be at the nicest place, the newest place. And if we were to zoom in here. I would also argue, there's a fair number of folks that are leaving Austin city limits that want to go to a place like a New Braunfels, like a Buda, like a Manor. And that could be for personal views. That could also be for economic. Austin is getting pricier here. So once again, these secondary cities, I think, are in a pretty good spot right here. U-Haul, I always think, is a great stat, a good thing to reference here from a one-way perspective. we check in on this. But yeah, this is a pretty big number. The population is moving and grooving, and it's measured growth. And frankly, not every city is going to want all of those 45 million people. In a mid-sized town, they're probably not going to want to deal with 10 developers. They might want to deal with, say, 2 or 3 at a time, which, is going to limit the amount of supply where folks will go. So that said, what does that mean? There might be other cities that say, yeah, we are ready to grow from, whether it's, 20,000 to 40,000, or, maybe 60,000 up to 150. Or frankly, 2,000 to 10,000. These are the decision points that folks know because, as I said, kind of referring just to the climate and the lifestyle here. And
Hey,
once,
Dan,
yes, sir.
you might be getting to this a little bit later on, but we have one question specifically focusing on Houston and your thoughts on Houston.
Yeah, so Houston, from a zoning perspective, it's a little, they joke, you can kind of have, a bar, a church, a restaurant, everything together here. The humidity is real, personal perspective here, but the business is solid. I tend to think of it as a New York where you just got to drive a bunch of places. But there is, the western suburbs, Katy, otherwise, there's just more I think they're taking a page out of Dallas, going out and up, especially on the western side, or going kind of northwest. So if folks are, once again, you have to do a quick drive to Austin, San Antonio, Dallas, versus, eventually you're going to hit the water on the east side. But yeah, I mean, Houston, we've liked it a lot for our industrial sort of work. And, likewise, I know Cypress. So once again, towns you probably never heard of, even if you are in Texas, living in the other city, that's where we're seeing a decent amount of the growth and new development going up here.
I don't know if this statistic is true or not, or maybe if it once was and it isn't anymore, but I heard that Houston has the highest number of apartment buildings per capita, I believe, or maybe its density of apartment buildings does that have a ring of truth to it?
I'll punt that one to some other Texans on the call. I never lived in Houston, so it's tougher to say for me
Okay.
personally. I don't want to misstate, but I'd say, yeah, there's definitely going to be pockets. There's a few of the very few of, I'd say, kind of the 1950 style bungalows where you can walk to your supermarket left. Houston definitely has had the growth. It does play the oil market, so there has been some of those boom bust cycles, and whatever was the hot housing, whether it was McMansions or otherwise, that has kind of played. Uh, I wouldn't, from density, it'd be tough to argue that, they're denser than Manhattan, but, maybe that was pulled from a certain.
Okay. And then a quick question from Glenn. You've mentioned a lot of people moving to Texas, but where are the people that are moving from Texas going to?
Yeah, I think some are going back home. As I said, culturally maybe a little different. Even prior to COVID, some of my friends from, SoCal, it didn't fit here. Some colleagues I worked with on the prop tech side, they had a year, their housing went up a little bit, but they went back to California. So some of it is on the personal side. There's not like a natural move for destination. As I said, it's not like oil ran out and folks are going somewhere else. All of Houston is moving somewhere. So big analogy, but I don't think there has been a deep destination where it's, where I'd say there's a sister city that I think, let's just call it what it is. The hipster cities, at least for Austin, Nashville, Denver, Portland.
Portland.
I think that's a little interchangeable. And like anything, I think folks, you might see it a little more kind of in the Dallas, that they'll leave to go to New York City for a few years, or otherwise maybe get their feet wet in finance and come back. But once again, the likes of a Goldman and stuff, building some pretty large, frankly, hubs, headquarters, whatever you want to call it here, makes it pretty easy to not move out.
Okay. We've got some people here that are anxious for you to talk about your upcoming projects and why you like them.
All right. Well, let me go quick through here, and happy to do so. The coast, this is great, and we do take advantage of this, knowing that the amount of jobs, once again, that it brings here. Business climate, yes, as I can say, it's a great place. Being an employee, sometimes not as much. Could be a wake up call if you're coming from the Northeast or the Northwest. So be cautious if you're a W-2 here. I'll just say that it may not feel as warm and fuzzy at times, but it is what it is. And then we talked, this kind of sum it up a little bit here, the state income tax being a very business friendly, and then on, for those stuff that have had value add, I think in a very respectful way, but if you don't pay, you can foreclose pretty quickly here, which I just think it's just a fair thing to do. And this has been the hypothesis here. What happened in California. And here's the big thing: Texas is big, but if you think of all of us probably envision San Francisco, you can't go out, you can't go up in San Francisco. What we're going to see, and I'll talk about one of our offerings, which at this point is almost a case study, but the same reason here in Texas, it's tough to go out, or I should say, and down. Why is that? Well, there's a limited amount of water and energy, and I like to say, listen, if you can't plug it in, you can't flush it, you probably don't want to live there. And that's what we're seeing here. The likes of certain neighborhoods across Dallas, across Austin, they're going to be grandfathered in. Nothing's going to be larger than a few stories. There could be something based on the limestone or frankly what's underground for how high something can grow. And then, calling it what it is, there still is a fair amount of not in my backyard that goes around here. Folks may not admit that, but that does do something to certain aspects of real estate. And just, I think it's the final slide here on Texas. And here's something I do want to point out. This might seem counterintuitive here, is just from a construction starts are down. So, in the Willamette Valley, which I love, great wines out there. As I said, the thing, this will be more apparent in a moment. There's a limited number of, call it, permits that are given, energy rights, water rights that are given here. And what we're going to see is that the net effect of that is, well, there's going to be less starts. So outside of just interest rates, of course, they say the residential side, what we're also seeing on the multifamily side is that folks aren't starting. So what does that mean on the flip side? If you have a project in process, particularly one would all say modern designs, you may have, I'll say, as we reference here, the 2025 vintage, and there may not be a 26 or 27. So however you want to term it, the newest grape, the prettiest boy or girl on the block, this is how it's going to be. So there's a huge advantage, shifting to kind of what we do. Our hypothesis when value add was still very sizzly for everybody, we kind of wound down our efforts, doubled down on being vertically integrated in terms of the team. We're able to obtain land at a very favorable basis back in 2021 and take care of a lot of the horizontal. Whereas now, 2023, 2024, we are going vertical, where historically we've had some really good, 2x plus sort of returns right around that average transaction period of 3 months. So with that, Daniel, to your question here, once again, just to prove we're Texas. This is all on our website and such deeper. The major metro areas here. And even with that, we kind of know the size that Arlington is great, Mansfield is great. The different parts of Dallas, we're actually headquartered. The LBJ Tower is actually our office. We sit where we own it. Same deal for those that know Houston. And these will be some new projects. We do like the question on Houston before. There's a lot of folks, especially as you get to the water, this is their weekend place, a second house. The Corpus Christi ties into a lot of the industry. Texas A&M, Corpus Christi, or otherwise just for personal reasons, folks want to live out there. This will be a nice one. All right. Sometimes you forget how much we have here, but to your question, and then happy to go back to any of those previous slides should time permit. So this project here, it looks like a funny name, Gruene. It's actually green land house. Used to have a lot of German ties to the Texas Hill Country, to Central Texas. There's just a few million left here. Folks, anybody with interest, especially if you have a hole burning in your pocket, let's talk sooner than later. Ideally, we will close this out by year end. That said, we will have very similar deals coming up in Mansfield and other locations in early 2024. High level, just go to the right side first, Daniel, to the question. There's two offerings. One is going to be typical equity. So if those that invested in a development deal before, with accrual from 8 to 10% based on the check size. And then, kind of we're targeting a range of low 20s, AKA a 1.7 to 2.1 multiple. Above it on the capital stack before we hit the external debt is a note. And what we do here is we pay out monthly. So it's going to be on an 8% annual with a 4% at the end. So simple math, let's say this goes 3 years, you're 100 in, gets you 8,000 a year, 666.67 a month. You would receive your 100 back and then another 4% times 3. So 136 all in on 100. And once again, it sits above the typical LPGP stack above there. And then there's the senior debt. So that's on the investment side. Big thing here is I just want to touch on it because I said you can also think of this as a case study because we see this time from the benefit of being in Texas so long here is the impact fees. What are impact fees? For those that play poker, think of it as your ante to play. And this is big. So this kind of moves as we've seen as a teeter-totter. When a city needs development, they will lower the impact fees, make it easy for a developer to come. I'll call this a pro forma friendly, over time, guess what? When too many folks come to the table, they're going to boost up impact fees to the point where you're just saying, I'm not going to play here for a while. So once again, being that we've been in Texas for multiple decades, we had the foresight to purchase a fair number of lots in what I'll call these secondary cities at prices now that are below market value. So you're getting lower impact fees and lower impact value here. And then finally, I think the amenities. If you're coming from out of the area or you're used to a bunch of sizzle, you want things that make it feel like this is modern, not an older property or not even designs maybe from pre-COVID that the property's finally getting done now. And, stating the obvious here, you want somebody that's been around the block. What I will share about BV Bridgeview, we have never had a capital call and always have returned investor principal, which, I think is a pretty good thing here. Just to give you a feel also, this is literally in Texas walking distance. Buc-ee's is your football size field shopping mall here. This is San Antonio. This is coming up towards Austin. Here's our site right here. We are doing studios 1s and 2s. This is going to be built to rent townhouses. So it's kind of that cycle. This is kind of a wealthier sort of enclave, whether you're going to do the typical multifamily or need a townhouse. Green Dance Hall, which is a great way to spend a night or a weekend or go dancing. That's literally a mile away. So I half joke Texas walking distance. This is legitimate walk or a bike or, a $5 Uber ride here. And this is, I'll call it an adult playground. It's just a fantastic thing. And more so, let's, on the work side here, there's a fair amount of industry going on here. Or let's take a couple where you have an executive at Dell and an executive up in Austin or Round Rock and an executive at USAA. You're still in a reasonable commute. So especially for our friends coming from Chicago, New York, California, you're in and there is some other highways that kind of loop around, this way here to get you there. Big thing, and for us as a fellow passive investor, question you want to ask, like, hey, what are the impact fees? To our question before, kind of on the taxes, what are you being charged here? And this, as I said, this kind of literally plugs you in, school services and such. This bounced up right after January 30th, about 200 and something, almost 300%. As I said, the final point I will share on this project, 5 of us were grandfathered in. One is doing workforce housing. Another one is doing us. We're doing the multifamily, and the other 3 decided to call us the next day and try to sell us their paper. They're just they're paper flippers. They're not doing much. And another benefit for being vertically integrated, a much lower cost, just under $15K to where we see the market today. Here's some of the sizzle here, and you'll see a lot of it, I'll say typical, but this is going to be, all top line. But this really gives you a feel like you're in the hill country. Serenity Park, Dog Park, which I know is huge for a lot of folks here. To the bottom here, which I think is great for our Tesla fans, the EV charging and pickleball courts. We kind of recognize with folks that might move here, whether it's going to be 6 months or 6 years. I just got back from Tampa, Florida 2 weeks ago for Thanksgiving. Pickleball is hot across kind of all age groups and everything. I think it's great for the spirit of the community. As I say, it's you kind of just getting that feel like I'm in the hill country. This is a great way to come back from work. 2 pools, the green space is really nice. Everything we do is going to be in this spirit right here. And then from a timeline, as I said, we've had folks that have been in and out of these sort of projects before. We're looking at an estimated 36-month hold. A lot of tenants we feel will come in 2025. So referring back to my wine vintage here, think of it as a 25 vintage. And from an exit standpoint, whether it's direct, we feel this will be a nice stabilizer for the DST market, or you never know, we'll have similar projects, so maybe we'll get some portfolio benefit here. On the return side, just to give you, once again, very conservative underwriting. The 219 comes from a property called the Landmark. It's a 2007 build, about 99% occupancy. We kind of showed you the amenities and what we're bringing for brand new build at a 210. So once again, almost a dime below, very conservative underwriting head to toe. Our senior debt's at SOFR plus 325, very favorable terms from that point. And just to confirm, this is a 506c accredited investors only. And so, that's the, I'd say, current project. If it's interest, there's just a few million to go. We're hitting a pretty hard open to discussions. I'll re-put my information in the chat should you want to call next week. Happy to share more. And then finally, just super quick, in the spirit, my son is named Alexander, so definitely have to show this one here. This is kind of between Dallas and Fort Worth, Mansfield. Just to give you a hint, Whole Foods announced they're going to move in about a mile away from this site. This is probably a one of a kind in terms of this property. This is I know our team takes a lot of pride here in this one. You can see from an income standpoint, this is a lot for Texas, 120 also. So, and in proximity to everywhere else. So, kind of the analogy going out and up and out and up. Mansfield is going to have these great, blue collar pockets, industrial pockets, and places where folks are really, really, really going to want to live here. And just to give you a feel of kind of, this is going to be a 5-leveler, a little bit higher than some of the other ones that we see here, with a lot of thoughtfulness that goes into the design. And, with any of our projects, we do show to our current, 800 or so investors first, want to give them first dibs on this. So there is a benefit. There's also a benefit to sign up, just even beyond the distribution list and such. And as you do go through the indication of interest, Daniel, probably not as specific to this, but my name, even if you can't spell it, you see Daniel K, click on that. So I know one of our earlier folks on the call, so they appreciated how the folks last week were really on top of it for our call. So that'll help me know that we can speak, within the 24 hours. So with that, just to sum up, we love Texas. We love it for multi, we love it for other asset classes we're in. We think it's great for cash, for retirement. And then on the flip side, as we do stabilize, we do feel it's really stable product here for the 1031 DST world. So, this is all of in our ecosystem. We're going to stay here. We're not going anywhere. And, with that, just really appreciate everything and you guys taking the time today.
Hey, Dan, we've got a question about that 12% note that you mentioned. Ashish would like to know, when's the initial distribution for that note?
Yeah, great question. So we move on a rolling monthly close. So just want to point that out. So all else equal, if this is open, which I don't anticipate, but if it were to be open in January, you'd want to get in by the end of the year. And then our goal is as we close the project. So basically, you would start accruing now, and then the intention is to pay out, I'd say January or February. Mm-hmm.
Okay. And then there was a question about terminology. What do you mean by vertically integrated?
Yeah, absolutely. So if I guess the two sore spots that we heard in the last few years, of course, rates went up. You didn't really consider floating debt, and the other thing was, why is this project delayed so much? Well, we had this subcontractor and they went somewhere else, and we had to get the B team, and the B team messed up, and the A team came back, and et cetera. Vertically integrated means that, in terms of your construction, your designs, you have a lot of it in-house. Yes, there'll always be a subcontracting component, but we feel we have a lot more in terms of being able to control the team, the budgets across multiple projects, the supplies, all of that we have in-house. So vis-a-vis, somebody that says, hey, I have an idea, but now I actually have to find the developer and find the subcontractor. And we've seen also from experience, things tend to work out better in terms of a timeline and ultimately investor returns when you are vertically integrated. Great question.
And we've got 5 minutes left in the meeting here, and we've got a couple of questions that are starting to roll in. Glenn is asking, what percentage of your portfolio do you retain in perpetuity? Or do you improve it and sell everything?
Yeah, great question. So our intention, and this can vary, of course, by project. So we have an income fund of triple net industrial properties. The last check that we took on that was in August. So it's a 5-year hold. This was kind of a set cash bond replacement. Excuse me. Otherwise, on the value add side, we tend to look at a 3-year horizon, 3 to 4 years probably now being realistic. And then in terms of where we go to exit, of course, a one-off buyer, a mini portfolio. This whole Delaware statutory trust, it's a very unique, very quickly, if you had a commercial property, you can 1031, same deal, kind of different situation. You can pay your taxes, or you can kick the tax can down the road and become a passive investor. So for example, we were one of the original multifamily funds on Crowd Street, one of our projects. As we developed it, leased it up, pushed it out to the DST world, as being looked upon very favorably by folks that say, yeah, I've been in real estate, I just don't want to actively manage, but I like how I can get quarterly distributions here on something that I feel is a good stable opportunity. So once again, being that we're also have for a non-institutional that we have this broker dealer arm, I'll call it's the option B or option C for an exit that other non-institutional sponsors just by definition won't have.
Okay. And Ashish is asking, do you take advantage of enhanced IRA to Roth conversion strategies for your construction projects?
I love this question. And so, yeah, you get it. I mean, the typical, I would say we, if you need, we do provide quarterly updates, sometimes mid-quarter updates. We understand how the value is going to be. So this is something that we are aware of as a strategy. You sound pretty versed in this, but just for anybody else on the call, reach out one-on-one. But yeah, generally, I mean, this is a typical development project, and I think it's pretty fair. What one may consider a middle construction. So take that for what it is.
All right. And last question here, and feel free to put more in. We've got 2 minutes left. But last question, do you have your own property management in-house?
Yeah, great question. And so in lieu of going back 100 slides, we do have our own property management. We've had a long-standing relationship here with, it's a joint venture here with LEAD. And, to the extent for this, we always want to have control over our projects. Let's say if we did go back to student housing or otherwise, we tend to have pretty good long-term relationships when we go to something on the niche side. But now this is a long-term relationship we have with LEAD. Thank you for asking.
All right, Dan, thank you so much for being here at the Alternative Investing Club. Can we have everybody take themselves off mute and thank Dan for coming in and speaking to us today?
Thanks, Dan.
Yeah.
Interesting.
Thank you.
Thank you, Dan.
Thank you, Dan.
Thanks a ton for
Dan.
coming in, Dan.
Thanks, Dan.
Nice work, Dan. Very informative.
Thank you, folks. And yeah, I popped it a few times in the chat. I know folks are coming in off, but my LinkedIn is there, my email, and especially my HubSpot. So I'd love to see a bunch of calls be hitting my calendar for next week, and we make it happen.
All right, thank you. We'll be back next week, and then the last 2 weeks in December, we're off and waiting till January 5th of next year. So we'll see you all back here next week.
Thank
Have a
you.
great weekend.